It's Tuesday, the 31st of January 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael Thompson.
Sean, 5 stories, 5 minutes. Let's jump straight into it. Story number 1, finally, after some pretty dire days, cryptocurrencies and other non-US dollar currencies like the Aussie dollar are shining again.
Yes, it's always risky talking about currencies and cryptos because things change so quickly in those markets. But for now, a greater appetite for risk among global investors has helped cryptos like Bitcoin and Ether, Tether, Binance Coin, which is otherwise known as BNB, Cardano, all those sorts of things. Bitcoin is the largest of the crypto units. Its value is up 50% since its bottom in November last year and 30% since the collapse of FTX crypto exchange. Now, the glory days ain't back. 15 months ago, one Bitcoin was worth north of 65,000 US dollars. Today, it's closer to 24,000 US dollars, but sentiment certainly has improved. Why? Investors don't mind taking on risk. Think about the Aussie dollar. That's not that risky an asset, but we saw how far it fell against the US dollar last year when interest rates were rising and there were fears of a global recession. Cryptocurrencies are like the Aussie dollar, but just more risky. So they were sold off big time, but as the risk of a severe global recession has receded, suddenly they're finding new advocates. According to crypto newsletters, institutions are back supporting the cryptos. Don't know whether that's true or not, but certainly values have risen. Generally, riskier assets have benefited. The Aussie dollar is another example of that. It's trading around 71 US cents, close to 7-month highs. Since late last year, it's up against the yen, which is important because of Japan as a major trading partner, also the British pound, the New Zealand dollar, and the euro. Michael, maybe it's time to go overseas.
Yeah, sounds like it. All right, story number 2. Opposition leader Peter Dutton will attend a meeting of the Albanese government's Voice Referendum Working Group this week after writing to the Prime Minister with a series of questions about how the Indigenous voice to Parliament would operate.
His decision to attend follows a formal request from Aboriginal leaders from across the nation for Mr Albanese and Mr Dutton to work together. According to The Australian, in a letter to both leaders this month, the Empowered Communities Alliance of leaders from every state and the Northern Territory asked the two politicians to find a consensus on what an Indigenous voice to Parliament could look like. They warned the referendum process is at a crossroads and risks dividing Australians. Now, Green Senator Sarah Hanson-Young said Dutton's decision was a positive step forward. Mind you, her own party room is a bit of a mess on the issue, with the party's First Nations spokesperson, Lydia Thorpe, saying she'll vote no in the referendum.
All right, on to story number 3. Sean, this is an interesting one. David Jones has dumped American Express as its partner for its DJ's card. It's going to work with Latitude Financial instead.
Yes, which is a big win for Latitude to get into store cards. Its share price jumped 9% on the news yesterday. The 10-year deal was called a strategic pillar by DJ's boss Scott Fife. Latitude plans to acquire David Jones' existing cards portfolio. There are about 190,000 active DJ cards out there. And Latitude will be issuing new cards from December. Now, just before Christmas, DJ's was bought by private equity group Anchorage Capital, and the new owners take full control in March.
Okay, story number 4. There has been a massive Barney going on overseas, Sean, involving the Indian resource giant Adani, which has a big presence in Australia, particularly in Queensland. A New York-based research group called Hindenburg Research last week made allegations of stock manipulation and accounting fraud.
Yes, they're pretty serious, and it triggered a sell-off in Adani's share price with about 50 billion US dollars in value wiped off the stock. Now, founder Gautam Adani is Asia's richest person, and he has come out fighting. He said the report, which claims the manipulation and fraud over decades, is maliciously mischievous. Over the weekend, Adani released a rebuttal of the claims. They said that the short sellers report was a calculated attack on India. But the sell-off continued yesterday. The conglomerate has now lost 66 billion US dollars in value. Not often do you get a research house, particularly one that's not particularly large like Hindenburg, taking on a giant and seemingly winning. We'll see where this one lands. A bit to play out.
Yeah, okay. Story number 5, last one, Sean. It may not be the biggest car company in the world anymore, but it sells the most vehicles. Toyota in 2022 topped the rankings, shifting 10.5 million units.
Yes, it came in ahead of Volkswagen. Sales included subsidiaries Daihatsu and Hino Motors. Now, Volkswagen sales fell 7% last year to 8.3 million units. That was its worst year in 11 years. Of course, 2022 was full of supply chain disruptions, and by the end of the year, weakening demand. But Toyota said it still isn't able to make enough cars to shorten delivery times, with waits of months and even years for some models. Tesla may be the most valuable car company in the world, but no one shifts as many vehicles as Toyota.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 31st of January, 2023. Now, remember, if you've stumbled on this podcast through a playlist, it's important to hit follow on the podcast so that you get every episode automatically into your own playlist. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast Five by Fear and Greed. Have a great day.